Okay, good morning and welcome to the early bird. And here we're looking at the Dow Jones on a daily chart, but it's going way back. This is 202 here, the year 2000 up here. So as you can see, it's quite a large picture here. Look, essentially this move down through here is a corrective move. It could be wave one or it could be the A wave. So this would be wave two or the B wave, and we'll be looking for the C wave to come down. In fact, we'll be looking for it to take these lows out through here. That's a long time off, and we don't have to concern ourselves with that at the moment, but it's this current price action here that we need to take a look at. And in looking at that, it'll be like this. So what we're sort of looking at here now is we've been looking at this wave four here to be to complete here, and I haven't got last night's bar in here, but that's down around the 11 240 250 down around this little area here. And what we're sort of looking at here, we're looking at this as being an A and a B and a C, just to keep it sort of simple. And then as a wave four, and then we're looking for 5 waves down through here, which will take out these August lows here. So we're looking at wave one coming down, wave two, wave three, wave four, wave five. So somewhere in around the 10,000, 10.1, 10.2, we'll see a bounce back up. That bounce will be an ABC correction, and it will come back up and retest supply. Normally the move will be 50-60% back up, but we'll get to that. It should be in 5 waves, 3 waves and 5 waves, a little bit like this actually. So I'll give us something to go by, and then we'll see the market work lower from that. 5 waves down here, 3 waves back up, 5 waves down, and we'll be working across the 10 there. The wave count will get skewed working with large numbers, and one being the strongest number. So our immediate situation is with all markets, all indices, is this pattern here. And last night, what we've got down through here so far is that we're looking for 5 waves in this first wave here. If we get that, then we know we'll get the 3 up, and then we'll get the 5 down. That much we can be sort of assured of. But so far coming down here, we've only got about 3 waves coming down. So it's this move that's coming down is still corrective. It hasn't actually confirmed 5 wave impulse wave just yet, but we've got 3 there, and we've got it's significant in the distance it's traveled. So we can only assume that we're on the right track. We don't have the evidence for that, but the personality and the structure itself in the way that it moved down certainly suggests that that we're on the right track. So as long as you understand this bigger picture here, and this is what we've been sort of looking for, and we'll be looking to add to shorts, not only daily shorts, but we can bring in the weekly and the monthly now as well on this. Okay, and that's the same with with most markets as well. When we're looking at some of the Asian markets, and that would be, bear with me a second, the Shanghai market. You can see here it's a little bit more a bit easier to sort of read. We had this lower high here rather than the higher high that we had in the US markets. So yeah, you can see that on the Friday's bar here, it's really, creating a correction here. Look, and the thing is, we may not even be going down in those 5 waves just yet. In this particular case, we could have some sort of triangle pattern here occurring as well through here. But the point is that we're in this correction here, and our local markets will be the same as well with the XJO as well, as you know. Just sort of going back over this, we made that new high here. But what we were looking for here, as you may recall, is that we would only ever be long if we found support on top of group one, of minor group one here, and that wasn't the case. So we can expect further downside here. And what we're looking at here is we're looking at this low being taken out here. So we'll see how we go with it all. Once the market gets trapped under 4,200 there, and normally when it's gone up like this and it comes back and it locks under there, then it's pretty much doomed at that stage, and we can then start considering this low being taken out. So we need the as soon as that 4-2 becomes resistance, then we can look at this being taken out, and we can look to play that game in there. We'll be looking for a structure like this here, 5 little waves here, which will probably take us down a bit lower than that from memory, and then we'll be looking for 3 waves up, which would something like that, and then we'll be looking for the next 5 down like this as such. But we're kind of already there on the SPY, so yeah, we need this 5 waves to play out. We'll have a look at that on the intraday anyway, but a larger 5 waves, like I mentioned on the day, we'll be seeing here as well. Okay, so this is the European markets on the daily chart here, and I've just been sort of using this as a bit of a guide stick, really, because it is the European banking crisis that commits a real problem to the markets from that side of the world, and this is what we should be looking at through here as well. So look, don't worry about all these targets and that just yet, but what we are looking for is that corrective pattern in there, which is definitely corrective because it's got that overlapping wave structure, and there may be more to it, but eventually we'll see it down through here, and the FTSE would be the same as that as well. But being Germany being the sort of central figure in there, we should just sort of keep an eye on its wave count as well. So yeah, the US 30 here, so this is its wave structure coming down. It's on a 5-minute chart here, and I'll just sort of from that last high here. So pretty much we got down, we're looking for 5 waves down to get, right? So basically we've got wave 1 down to here, and that would be in 5 waves down to here, then as wave 1, wave 2, 5 waves in the 3rd wave here for the 3rd, ABC for the 4th, and down for the 5th. So then we've got wave 2 here, and then we've got wave 3 going down, and wave 3 would be down for 1, back for 2, down for 3, back for 4, and down for 5. So the wave 3 would be down there. So that's only 3 waves basically. So we'd be actually looking for 4 waves. So we'd look for the 3rd to come into play here, the 4th, bring that over a little bit, but the 4th, and then the 5th down for wave 1 here. Once we've got wave 1 around 11,100, or maybe even 11,000, depending on what news comes out. It's a little bit hard to keep a natural flow of things these days because everybody's a bit jumpy and so forth. So, but look, 5 waves down, and then wave 2 back up. The wave 2 here could come back up and retest the 11.5 here. That's a real possibility. Or it may get stuck under the top of group 1 here, the 300 here. I'm not sure yet because we need to allow this to play out through here to get those 5 waves into play there. And that's the same with the S&P 500 as well. You can see it a little bit more clearly here on the 1-hour chart. We've got the A, the B, and the C wave coming up here. Yeah, so never really found support there. Trading above it is... that retest there is a little bit sort of small, and it's still part of it's still part of that particular trend there. So it was this retest that's important, and it still could do that because we've only got 3 waves down. We could get an A and a B and a C across here, and then back up for support. I doubt it, but we've got to look at everything. All the supports here would be subgroup 2 here, the midpoint here on this trend line through here, and then this group through here as well. But once again, we expect this low to be taken out here, August 9th on US markets and 10th on our markets, and then down to 1,000 here on the S&P 500 here. And the UK market's the same as well. All probable tops in here, all got the same sort of patterns through here, slightly different. Once again, the 5-2 here, once that becomes the resistance, then you can expect to see the price under here and taking out that low there and being at a very moderate 4,500 level there. But there's there's a long way to go to get through this 5,000 yet. Not that it makes any difference to very short-term traders and scalpers, but people taking positions would want to keep a stop above here in there somewhere and be looking to add all through here. And the idea of adding is every time you add is to reduce the position size by 50%. So you're not building up a pyramid of risk. Right, our local markets, the same thing as well. I'll just bring up the SPY there on this one. This is the SPY here. Yesterday we were sort of considering this to be a possible top in here, and then we've got wave one here now, we've got wave two here, we've got this nice strong third wave coming through here. So the third wave will have a low in here somewhere, not much further down, and then it'll have a retest into the 4-2, so we can expect some sort of reaction there as a fourth wave. So we've got the third wave coming down. I'll have a closer look at this when I put out the chart on it in the SPY section, but once it's trapped under the 4-2 here in the minor group here of minor group 1, 2 and 3, 100, 200 and 300, once it's actually trapped under here, if it's done its little struggling and whatever, once it is trapped under there, then we can consider it further down. But at the same time, we're still looking for that 5 waves down as well, you know, that it's same as in the US markets, that 1, 2, 3, 4 and 5, and then 3 waves back and then down again to take out that 4,000 here. So once we get that 5 waves down, then we've got confirmation that we're going to get another, that will give us the confirmation that we're going to get another 5 down. That's the whole point of it. And that was the point here, because we had a small 5 waves in here. If we get 5 waves in the turn coming down, and the first turn down, then we can be assured of another 5 down, but we can only be assured of it in terms of 1, 2 and 3, or an A and a B and a C in Elliott terms. That's as far as we can go. So in this bigger picture here, if we get 5 waves coming down through here, then we can be assured of getting yet another 5. So that's the beauty there. And we do think this is the case. We're going to get 5 waves down because we can see the treasuries pushing up in their 5th wave as we're coming down in our 5th wave to the downside in equities, because that 4th wave is finished that we've just been talking about, and the 5th wave is coming down, and that was easier to pick up in the treasury markets, seeing them pushing to the upside, which will push the yields to the downside. So that was a bit of a lead there. And then we're also sort of seeing the currency markets too, confirming these price actions that we're seeing in the indices. So we are seeing it from other markets, not only just the equity markets, and that's where we got the first thing from. Okay, so the oil market here, of course, it's just going to follow stock, but once again, we've got that larger A, B, C there, and we were talking about those 2 bars there off their highs the other day there. It's only really once it gets under the midpoint here, because the 80 is important, the 90 is important, and the 85 is the next important. It's the midpoint. So if that becomes resistance, then we can look at this coming down and taking that out there further. It's pretty much simple as that. The 86.50 is a sub-level between 85 and 88. So that's going to have an intraday play through there, but we want that under there. But continue to short OSH and WPL and so forth, because we're under the level here, we're sort of biased, but this can just be a reaction from the 90 as well. So we just got to be a little bit careful, but confirmation would be under the 85 as a retested resistance. The copper market, yeah, well, we're considering this to be a high in here of the whole correction, but it may also just be the top of a 3rd wave. Once again, as with the other markets, we need to just to wait and see. If this market moves down under the 105 here, and it's likely, then we'll know that that we've got a top in place here. And yeah, so the 410 here, the 400, then the 410, 420, 430, they're the main numbers. So if the 41 here becomes the resistance, then we can look further to the downside, and this is going to confirm the Australian dollar being in top in play there, and also the materials sector as well. So I think we shorted BHP at 40. Me not personally, but on the right on the $40 there on the turn. So we'll see if that plays out there. But this is just normally expected to come back down to the 3rd, 4th wave of 1 lesser degree here. So we'll see how that pans out there. This is just the 107.72 here, but the 108 would be the important number that you'd want as resistance as triggers to the downside through here, a bit like the the 417.72 up here, or the 18 as you like, being resistance there. So anyway, we'll see how that plays out. Now the gold market, this is where we've may have made an error in the sort of short term, I guess. Now we're looking for a B wave to come up to here, and it still can come. Technically, it can be all the way up here until it takes out that high there. So it causes a bit of a problem. It still looks like it's got further to push up through here. Yeah, I don't know really what to sort of say about that. A new high here would confirm 2000 as the next target at that point. Otherwise, we'll be going from an A and a B and a C wave. But I doubt that, because I feel that we probably go straight up from here, because gold is following, is doing the inverse to stock. Okay, I thought that traders would be swapping gold for dollars, but that's not the case. Even though the dollar market is still pushing up here as well, we've got the dollar still pushing, the US dollar still pushing up. So it's just another little sort of rare event. So we'll see how we go with that. And now we're on looking at the US dollar here. This was important because this was also a bit of a lead in for the stock market to turn as well. So we'd seen this move coming up through here, and even though that you can count this move up here in a few different ways, but whichever way you count it, it's still an impulse wave. It's still 5 waves, and as soon as that high there got taken out, then I figured that we had a top in the equity markets as a wave 4, because this would have created, whichever way you look at it, a 3rd wave here, a 4th wave here, and a 5th wave here. So that would have given us 5 waves. So even if that came back for wave 2 here and then pushed up, would still be in the same, the equities would still have the same top in as a wave 4 there. So this was really a leader in all of that, and now we're looking at wave 3 here, the A, the B, the C for 4, and we're going up for 5. Now it could fail just here, or it could fail at 75 here, it doesn't matter, but we're looking at a wave 3 here, and then a wave 4 and a wave 5. So we're really looking for this to go much further up. If we just have a look at that in terms of the DXY here, and we find it, there it is here. So this is what we're looking at here. That's the huge big picture of the dollar there, and yeah, so if this is correct here, then we should see that push up, but this is still can be considered a corrective pattern here, and we can see a further downside to 72 here. But if it is correct here, then we'd be looking for looking at the levels here, would be looking for this 80 up here to be taken out, and we'd be looking for 70. As soon as 75 became the support, then we would have something quite sort of concrete there, and that's where you can certainly trade to that point. And we've already started trading the euro to the downside as well, so that's where that lead comes from, and we'll sort of focus on that. But once this finds support on the 75 here, then we'll probably swap Aussie dollars for US dollars at that point there. So with the expectation of the market moving above the 80 here. So we'll see how we go with that. But we want a better support system first. So trading's one thing, but moving cash around is another thing. So anyway, we'll wait for support to be on there. But as it stands, we'll be looking at a wave structure that would have something of that nature there. So that's basically wave 1, wave 2 to there, and this is up for wave 1 here, just to fill in on the picture. That's up for wave 1 there, to there, back to there. So that's what we're looking for there. So we're in this 3rd wave here, which will go much higher than that. That will probably go all the way up here somewhere. So then we've got this 5 waves here. So we've got up for 1, A, B, C, back for 2, and then we've got up for 1 and back for 2. So it should really move out quite sort of strongly through here. So we'll see when that 75 becomes support there. So it's a series of, it's a building process across here, but this can still be corrective as it stands, but all the internal structures are certainly pointing to the upside, and that's why we're shorting the euro on that side. So, but as that pushes up, then that makes the dollar weak as well. I mean, the indices weak. The euro, this is just the daily chart here, and it's just looking really at using the robo method to get a start in all of this. The big fat green line here is the weekly low, so that's been triggered now as well. So I've put that in. And these are just the little green lines here are just the robo entries here. Yeah, and we can bring the stop down, but we still want to keep the stops. That's the weekly high there. So that will be another complete the weekly orders will be separate from the daily orders. But what we're looking at through here is we're looking for that 5 waves down, and which will come into the 140 is the important area here. But as you can see, the 141 and the 142 here have got these old lows here. So looking for 5 waves down here, it's going to end in here somewhere, okay? And then we're going to have a retest of the trend coming down. So the retest will check to see how strong this trend is coming down through here. So we'll see how high it comes, but it'll be in an ABC, a 5-3-5 structure. And then once that occurs, we'll be looking to add to those short positions there. It's not, as I mentioned on Friday, I think it was, or Thursday or whatever, it's not a good idea to, if you're going to trade this sort of longer term to the downside, it's not such a good idea adding or getting new long-term positions in here, because it will come down through here and then go back up here. So you'll end up carrying a loss at some point. We don't want to do that. So you just have to wait that out. Sure, there is a risk that this market could just continue down with very shallow retracement levels, and the euro is known for that. So we'll just sort of see how we go. We're hoping that this low here and the high on 75 on the US dollar would slow that down somewhat, and we'll get a clearer picture of that when it comes through there. So this is the wave can on the euro. It's still expanding to the downside, but we can see here that it didn't really move as much as equities did, and it is slowing down. So the 5th wave could already be in place here. I need to figure out if what we've actually got. This does look corrective in here, so there might be another 4th and 5th to finish it down here. Then we go back up for the ABC here. So we'll be looking for that. But we certainly have our impulse wave to the downside here. So we're looking at 5 waves down. We'll be looking at a 3-wave counter trend and so on. And that would be a bit like the Australian dollar as well. With the Australian dollar, look, we knew that we had a top in place. I just didn't know if there was just going to be like one more little push up through here to the famous 77.2 number. So anyway, we got close enough to it. It's always nice to get on target. I think this is how it is at the moment, is that we've got 5 waves down to this point here for wave 1, and that would be down for wave 1, back for wave 2, 3, 4, and 5. I could be wrong there, and that wave 1 could be there. I need to do some more work on that. But it does appear through the 107 here quite nicely, is that we've got some sort of wave 1 down here, and an A and a B and a C back for wave 2 here, and we're in wave 3 coming down through here. So let's just see how we go with that. We want to see a bit more evidence of that. Once the market moves on to 106, then we can really begin to call that in as a high there, and we would have to pretty much say that it is, but assuming and having evidence are two completely different things. But that's the trouble with trading. If you wait for all the evidence, it can be too late, and waiting for the evidence would have to be, we get 5 waves all the way down, and then we get 3 waves back up, and then we short it. Like the euro, we jumped in sort of early at the top here, and sure, we know there's a risk there, and that risk can lose, because when you're trying to get tops or bottoms of the market, it can take 2 or 3 goes, so you need to divide that risk capital up into 4 equal parts, and then keep cracking away at it. Okay, so this is just the Australian dollar again. Yeah, I won't go into that, but so we'll just discuss this here. I think this is really good because this market has this is a little bit like what we sort of expect in the euro in a bigger picture. We've got that 1, 2, 3, 4, 5 down here as a 5-wave structure, and then we'll be looking for an ABC, and the ABC is the A, the B, and the C wave here. And it's working into this sort of level here, but we know this is corrective here simply because we've got 5 waves down here, but also in this one here we've got an A and a B and a C here. We haven't got 5 waves there, we've only got 3 waves there, so that means that the move up is corrective. And yes, we could have made a mistake and shorted it here and gone down from here, and got stopped out again up here. But you can pick it up later, and you can see how we've got that, still knowing it, the whole pattern is corrective, just a bigger pattern. And this pattern here was very much like the equities, isn't it? That big wave 4 that we've just had. Same sort of, exactly the same sort of pattern. But what I think the interesting thing here is the timing of it all, because we can see here that we're above here. We can see that it's doesn't really want to go any higher. It's struggling. Then it drops through. Then it goes back and retests here. So that's and then it fails from there, and then it retests the 65 as well. So we can see here that it's working through these levels here, and it's stuck in here. The close is always something a bit different, but this will be covering and getting out and whatever. But just that process through here, you may not always get it. You may have had a loss in here, and shit, you may have even gone long here and got sort of stopped out here. But then you've got to kind of keep playing with it. You've got to kind of learn how to recognize the patterns and to use the levels. And of course, it's money management as well from that point there. Well, okay, that's about it. The main point is that for us trading local stock, we feel that the rally is probably over, and looking at the XJO here, we've been shorting from here, and we'll continue to be shorting from here, with the view of taking out this low down through here. It's never that easy to get from A to B, but this is where we could, if we are right, this is where we could start using the monthly robo, and certainly the weekly robo as well, because getting through to 4,000 here, 4,100 and 200 is going to be a bit of a tricky thing. So anyway, we'll see how we go. But yeah, those robo trades will be looking at weekly entries, so just use less capital and get your position sizing right. Alrighty, that's enough sort of rabbiting on, and I'll speak with you soon. Enjoy the weekend. Cheers.